Good morning, everybody. This is Paul Crammy. Welcome back to our session today. Today, we're going to look at, by looking at some examples of some estimates that I've created in control. So we'll just look very quickly, and then we'll look at the results of those estimates in handouts that I have that you should be able to download. And I would encourage you to do that. And then we'll review how to use a tool that you might find helpful to determine what your hourly rate is or should be for your different pieces of equipment that you use. And then also a separate tool that you also might find helpful to help you determine what your labor rate cost should be for control. I think one of the things that I should have mentioned and alluded to on Tuesday that I want to now, we deliberately try to focus these webinars to get a blend of people that may not be long-time users of control and may not use. So we try to avoid being too basic, and we try to avoid being too advanced in our presentation of the topics. But in any event, you're always encouraged to ask questions. If a question is too detailed for the time that we have on the webinar, I'll defer that question to the consulting staff to address. As we get into the last two topics today, I will reference a couple of things that are services that I offer to clients that are outside or independent of Sirius, but the services are endorsed by Sirius. And just in that event, my contact information, phone number, and my website and email address, be able to see on the screen. And that both of those will deal with the equipment calculation stuff as well as the labor rate stuff. So I'm going to change the view of what we're looking at, and we're going to go first to control. And I've got several estimates that are open, and all I'm going to do, I'm not going to get into any detail whatsoever on these. So the first one, these come in pairs, okay? So the first one is what we talked about on Monday, or on Tuesday, I'm sorry, where you use a single pricing template to produce the price in a non-costing context, for a particular item. So the first one here, line item 1, would be a quantity of 10, 18 by 24 signs on acrylic. Just a single line item that does area-based calculation in that context. And then taking the other extreme, producing 1,000 of those, also on acrylic. So they both in both of those cases, it's a printed image, it's a lamination of that image, and it's a mounting to the substrate. So that's the first one. The second one is identical to that, but where there's discounting involved. Okay, so it's as I said, these come in pairs. The next pair of examples are also area-based, but use the same kind of concept that we again talked about on Tuesday, where we have one pricing template for the printed image, and then you would select the what you're going to print to from that template. Lamination, where you select the laminate material, and the mounting, where you select the substrate. Again, this example, this pair of examples is area-based pricing, and both of these are without consideration for costs. In other words, we assume that the cost is not a factor. Okay, so this is without discounting, and this is with discounting. There are no handouts that are available that illustrate any of these two pairs that I just talked about. The last four pair, or the last two pair, are with costing as a factor. So this one, the 575, that is 8 examples. And if you go down to the bottom, you can notice that one example uses variation for area-based pricing, and one uses it for cost-based pricing. This one is without discounting. The next estimate, number 584, is exactly the same thing, but where there's discounting that's in effect. These two are both based on acrylic, and these last two are the same kind of thing, with and without discounting, but the substrate is aluminum. And these last two pair, those are the ones that have the handout that's that's in control. Now, before we tackle and move on, I want to see if we have any questions. This is the handout from Tuesday's session. Now, I want to just step back for a second to see if anybody has any questions that they thought of after the session ended that they would like to ask and get clarification on. So any follow-up questions? All right, I'm going to close that one, and I'm going to bring, excuse me for talking to myself. Okay, now what I need to do is to change the view here to preview. This is the handout for acrylic, and I'll just briefly walk through these to kind of give you a flavor of what it is that you're seeing. So the top part of this is where there's no discounting involved, and the bottom part is where there is discounting involved. It just shows that I'm doing a roll print in the quantity and the size and a single-sided and what the area is that's involved. So as you can tell, I basically created this worksheet from the estimates that we just explored. The next page is excuse my language, it's a regurgitation of what the first page was. And here I'm trying to get it down so that we're not not looking at the prices and things like that at the total level, but trying to look at them so that they're at the per each level. Okay. So here we're dealing with the this calculates the, you'll hear me refer to the effective markup, whether it's cost-based or area-based pricing. So this is the markup for area, the markup pricing. What I refer to as a ideal or a basic markup, and then the per unit cost, per price cost, and on. So now let's get into the next graphs. I think so are the ones that are important. I realize that you can't really read the numbers on the screen. They're not. Let me just try to make them a little bit bigger. To see. There, that's a little bit better. All I'm trying to illustrate here, we're looking at no discounting involved, and we're looking at the multipliers, the effective multipliers. When I say the effective multiplier, what I'm talking about is taking the total price and dividing it by the total cost, and that is the markup. That's the effect, what I refer to as the effective markup. So the markup itself, if you're in cost-based pricing, it's a combination of what the markup is for labor, what it is for equipment, and what it is for the materials. In the case of area-based pricing, you really have independent markups. So the only value that's relevant is what this effective number is. So the red line is kind of what I perceive to be kind of the floor, kind of the baseline multiplier. The green is what the multiplier would be for area-based pricing, and the black one is what it would be in a cost-based scenario. So this is no discounting, okay? Now I'm going to come down to the next page. I skipped one. This is the same view, but where discounting has been introduced, okay? So as you can see, as the quantities begin to increase, the effective multiplier is going to begin to drop in that kind of a pattern. And it's going to do that whether you're doing area-based pricing or whether you're doing cost-based pricing. The purpose of these two graphs, without discounting and with discounting, is so that you can get a visual image of the effect on the multipliers, the effect on the per each pricing, and gross margin. So the next two slides are the pairs related to this is the no discounting, where we're looking at the per each price. So the red is the cost, the per piece cost. The black lines are the cost price, which is up here at the top, and the cost-based gross margin, or the gross profit. The green is the area-based price and the cost-based, the area-based and the cost-based gross margin. And then also all of those are measured against the cost. So that's no discount. And this is what it looks like. Come on. This is what it looks like with discounting. So you can see the prices begin to drop, stabilize a little bit, and it depends on what the structure of the discount table is. So this is one that I've used, for illustration for a long time. Notice that the cost, whether you're discounting or not discounting, the cost stays constant, relatively constant, and it's the price and the margin then that get fully impacted from from whether you're discounting or not. Any questions? They want me to go back and look at so you can see a little bit differently.
No questions at this time, Paul.
Okay. I'm going to bring up the aluminum one, and then we'll change the view. All right, now this is the same concept, but with the aluminum is the example. So there's the data entry piece of it. This is the stuff that drove the creation of the graphs. And here we're seeing what the multipliers do in a no discount context, and what they do in a for cost based and area based. Notice that the cost based and the area based pricing, the multipliers, and you'll see it in the per piece price too, that they flip. In the acrylic, the cost base was higher than it was in the area base, and here it's the opposite, and it simply was driven that way by the individual area charges that area charts that I chose for the aluminum, versus the acrylic. So that's the
Paul,
we
do have a quick question.
Okay,
and it's from Adam. And Adam, I will unmute you. Go ahead.
Hey, good morning, Paul. What is, based on this graph, so how many units is this reflecting or showing?
The aluminum.
Or are you just showing a constant?
I'm showing a concept. On the case of aluminum, the aluminum example, I did a quantity range from 1, and it peaked out at 50. Same size, 24 by 36.
Okay.
And on the other one, the size range for the 8 samples, the size, not the size, but the quantity range from 1 to 1,000.
Okay.
Okay. So the acrylic was illustrated as an 18 by 24 with quantities that range from 1 to 1,000 with 8 samples total. And the aluminum was 24 by 36, and the quantities range from 1 to 50 over the 8 data points.
Okay. All right. Thanks, sir.
Does that make sense? Yep.
Yes, it does. Now it does. Yep.
There's the data side. Now we're getting into the graph. No discount. What the multiplier graph looks like with discounting thrown in. And again, cost, the baseline stays static. This is the no discount per piece price. Notice that the per piece price is higher because of the cost of the substrate. Oh, come on. I just lost my own view of because of the cost of the substrate. Okay, so there it is with no discounting. Here it is with discounting thrown in, range from 144 to 112. Again, you're seeing a more stable decrease because the quantities aren't. There's not a big spread in the quantity.
Right.
And here's the no discount cost per piece. I'm going to have to replace this template, these graphs, Linda. I think I've got the same issue that I had that I caught yesterday, where the y-axis is not presented correctly. There should be, well, this one is okay. That one is okay. These are okay. I'm sorry. These are okay. What I'm trying to get at here is the effective cost per square foot. I didn't comment on these last 2 pages in the acrylic, but this is showing what the effective per square foot of area versus cost is. So the green is the average square foot for the aluminum based on area, and then what it is on cost per square foot for the on a cost-based scenario.
Paul, we have another question from Patty.
Okay.
Or
Hi,
Pat.
Patty.
Pat, and I will unmute you. Go ahead, Pat. Maybe she doesn't have a mic. The question is, what is the multiplier that causes the flip in the margin between aluminum and acrylic?
It's not the multiplier. Well, you can blame it on the multiplier, but in reality, Pat, it's the value that I chose for the cost, for the price per square foot of the aluminum substrate. I just used what the aluminum multiplier was. If we go back to control here, let me make sure that you're seeing control just a second. Okay, the acrylic was at $60 a sheet, and using a 4 times multiplier for the substrate itself. The aluminum is $120 a sheet, and it is also using a 4.0 markup. So from a cost-based pricing, these two are working identically to each other as far as the markup is concerned. If I come out to the look at the markup, I'm not in the right spot here, just a second. I'm using $18 a square foot area-based price for the aluminum, but for the acrylic, I'm only using $7.50 a square foot. So it's in reality, what I would probably end up doing would be to nudge the acrylic a little bit higher than the 7.5. It's just the values that I chose, Pat, for the acrylic and the aluminum area price. Does that answer your question?
I don't know that they have a mic, so.
Okay. Let me just pause for just a second. That really is the comments on the graphs and the samples. Again, the samples were based on different quantities, from 1 to 50 for aluminum and 1 to 1,000 for the acrylic. There was no particular reason for doing, for choosing that. I wanted to just show the extreme, the table itself, the discount table that I was using went out to 1,000, where it stabilized at that point with the different increments, in between. Any other questions on the graphs or these samples before I switch subjects and go to the equipment discussion?
No other questions, Paul.
All right. Okay, this is the equipment tool. Then our intent is sometime in the next few weeks, we hope to post this on the Sirius website so that anybody that wants to use it can do so. This worksheet and the one for labor are structured in much the same way. They have 3 different worksheets. The first one is just the instructions on how to use it. The second one is, the second page is where you would enter your general parameters, and I'll comment in more detail on these. And then the last page is the results, okay? So for the equipment, for the instructions, just follow them, okay? It kind of explains each of the 3 pages that you're seeing. So on the equipment side, to do the hourly calculation, there's 3 basic things that you would provide. The first is, what is the calendar year that you want to base this on? So you can see I chose 2019. A digression here. Whenever you see the little red diamond up here, look at them, because there's comments that I've provided, okay? So here it says just choose the year, 2019. The next is create a list of the days or the holidays that your business is closed. So I've said New Year's Day, Easter in April on the 21st, Memorial Day on April 27th, and so on and so forth. I think I got my month wrong here. That should be 5. Independence Day, Labor Day, and so on and so forth. Then these columns here will eventually be hidden, so you can't see them. And what this, I'm using a new function in Excel that I had not been aware of before. So effectively, it's starting from this beginning date. And here I'm just using the date structure where I'm picking up the year and the end of in the end. Then it takes notice this is the new function that I've never heard of before. It says net work days. And you present it with a start date and an end date, which is the January 1 and the December 31. And then you give it a list of holidays. Holidays meaning holidays within Monday to Friday. So it backs out those holiday closings. Just let me clear these for just a second. And notice the 252 is going to go up. So without any holidays involved, there would have been 261 days that fall within a Monday to Friday. Okay. If I inject the holidays into the mix, it takes 9 days out. So out of the 1, 2, 3, 4, 5, 6, 7, 8, 9, out of the 10 days that I've actually put here, 9 of those days were during the week. Okay, so that's the second piece. Start with the actual year, give a list of the holidays, and that's going to provide the number that the control or the worksheet is going to use in determining the hourly cost. This number here, the cost of money, this is one that I feel is very important, but it's oftentimes not considered. If you purchase a piece of equipment You may have to get a loan for that piece of equipment if you financed it. And if that's the case, then you should inject the interest rate for that loan. If you paid cash for it, that effectively means that you have lost the earnings opportunity for that money that you paid cash with. And if that's the case, I encourage you to include that loss of funds opportunity. So if it's an interest loan, it might be in the 4.5% range. If it's a lost opportunity for the earnings of that money, it's probably lower than it. It might be in the 1.5 to 2%, but still a meaningful number. So you don't have to use it. If you say you don't want to take that into account, just enter the, what did I say? Just enter no. And that's going to take out that factor. I'm going to leave it in there for now, and then I'll go back and show you the difference. So this is the data entry, just the year, the holidays, and whether you're going to use cost of money. Then on the third sheet, this is where it gets dizzy. Basically, in the green columns, each of these have instructions. This is just the year that a particular piece of equipment was purchased, what you're going to call it in control, what you think the term of the loan or the number of years for depreciation, okay? What do you think is the real useful life of that machine? And particularly with equipment, with technology changing as rapidly as it does, the useful life may be less than the actual life, okay? How many hours a day do you think that machine is working? This can be a very, very difficult number that's accurate and reasonable to use. You see the number 12. This particular client works 2 shifts. So having a 12-hour per day usage is not out of the ordinary. So, but that's a very difficult number, to zero in on. And I'll comment further on that in a bit. What the current multiplier is that's in control. The next pair of columns here is the cost of the equipment. Some printers and routers require a workstation, a dedicated workstation. So that's the cost of the workstation. This is the cost of the printer or the router or the plotter, okay? This is the cost of what you expect the annual maintenance expenses to be. That could be a service agreement. It could be out of pocket. If you don't have a service agreement, what you might spend logically or effectively on it to maintain that equipment over the course of the year. This should exclude consumable costs like ink if it's a printer. Now the blue columns, these are calculated values, and the worksheet that will be posted, the formulas that are in here will be locked, so they can't be altered. But this is the cost of money for this particular device. So see, it's $33,000. If I come back to that page right here and say no, then come back to this, that cost of money disappears. Let's stay on this page for a second. So this is the total cost of the equipment, and that's what it is per year. This is what it is per day based on the 12 hours, 12-hour usage. and this is what the hourly cost. This is the yellow column would be the value of that equipment, the hourly value that you would put into control. Let's go back to here and keep the cost of money. Well, before I do that, remember the number 1081. Remember that number. If I go back to here and put in the same number that I had, 1081 to 1266, almost $2 an hour by excluding the cost of money. So it's not an insignificant consideration when you're trying to determine what that hourly rate should be for equipment. So I really encourage you to strongly consider using a cost of funds for that particular device. This is what the billable rate would be that control would generate based on the multiplier, the 2.1 in this case. Okay. So I think the billable rate without the cost of funds would have been in the $23 range, and the billable rate with the cost of money is the 27. The last column is an FYI column, and it's what you might use as the annual depreciation value for this particular piece of equipment. Okay. Always, this has no bearing on the hourly calculations. It's just an FYI. It's one that you might share and discuss with your CPA, because ultimately, how you depreciate equipment should always be provided and guided by consulting with your CPA. If we change the number of hours per day, this is another extremely important number. If we change it from 12 hours a day to 10 hours a day, it went up from 12, went up to 1519 from 1266. So this number, though it's hard to determine accurately, is very, very important. It has a significant impact on some of your more expensive equipment that you might use. So the point is that if you understate that number, if you make it too low, your hourly cost is going to be boosted higher because you're spreading the cost over fewer number of hours. If it's too high, you run the risk of understating the hourly charge. So it's got a double-edged sword. You can hurt yourself if you make it too low, and you can hurt yourself if you make it too high. Well, that brings up a point that I'm going to just throw out at you to consider. That is one of the services that I offer to clients, and I've worked with maybe 25 or 30 to date, is I refer to it as a pricing evaluation. We simply take all of your part data from control, all of your part usage data from control, and we can zero in exactly right to the hour what that hourly rate per day is. But it takes a lot of number crunching and a large amount of data to do that. But that option is available. Go to my website that I mentioned at the beginning, www.pcrameyconsulting.com, and you can learn more about what that pricing service does. It does more than just the hourly, determining the hourly cost. It'll tell you the hourly cost of labor as well by type by the part type. let me stop here and see if we have some questions on this tool. And again, this will be posted online, and anyone will be able to use it.
Paul, we don't have a specific question on the tool, but just a comment that this is applicable to both version 2 and version 3 of the data set, because it really just helps you to figure out your equipment cost.
Okay, next we will go to a different spreadsheet. This is the same dilemma. How do you determine labor cost? It's structured the same way. You got an instruction sheet, you got a data entry sheet, and you got a calculation sheet. So read the instructions. Basically, what you're looking at here is the top in the light tan color or whatever color that is, the top 4 rows. This is the numbers. This is the result. This is the answer to your questions. So the first thing is this particular customer. This is a real this is a real set of numbers. Okay, not just ones that I've invented. The people, the wages that he paid for people involved in production was $150,000. We divided that by the hours, the total production hours of the people that were involved in the production, 8,200 hours. So that represents $19 an hour, okay? The fixed cost, what's it cost to open up the doors? $139,000. Spread that over the same production hours, injects another 18. What does the employer pay for taxes and benefits for all employees? And I stress all employees. Spread it over the same number of hours. So this suggests that the average labor rate for this client is $43 an hour. Now, I might add that over 38 engagements that I've done, where we've done a really deep financial analysis, this $43 an hour is very much in line, okay? The overhead component is an example. I've seen historically range from in that $18 to $22 range, but the total of all of them is very much in line for this customer, and it compares very well with the what I have found in the past. Let me ignore this and come down to how do we get these numbers? So this is the data, this is the payroll side that affects this top row, their name. Here, we're trying to say, where does this person AR work? What do they do? It says that they're 100% involved with the office and administrative side. This one is 100% involved in production. This one splits their time between production, 11.25%, and sales at 88%. All production, all administrative, production, split. So here we take their wages. We get this from the payroll report that this particular client provides. We get it straight off the payroll report. So it's based on what was actually paid to that employee for the year.
Paul, can I just interrupt you a minute?
Yeah.
Just for clarification, that production wages is just your production staff?
Yes.
Okay, because we did have a
Yep.
question on that.
Yep. So no, the $7,200 is the grand total, Linda, for just for that person, period. On the next worksheet, we're going to split that number between production, sales, and office based on based on these percentages. So he was not involved in production or sales. So that's the reason that these are zero.
Correct. But the question
Okay.
specifically was, is the number of employees only, not owners? So I think we need a clarification that we're just looking at production people.
This is all employees. It's everybody, owners and non-owners. If an owner was on the payroll report, we pick up the numbers, because some owners spend a little bit of time, believe it or not, in the production side or in the sales side. So it's whatever they show on a payroll report. Those are the people that are listed here. And it may, in fact, include owners. In fact, in this particular case, there's a husband and wife team, and they're both involved. One of them is involved in a little bit of production guidance, and the other one is involved in sale and administration. So they're split. Am I making myself clear? It's just what is on the payroll report. That's what we're using, and we're distributing the time and the dollars based on what that particular person does. For purposes of the calculating the hourly rate, we're only interested in this group of people right here and the numbers involved. So you can see this is how the wages were distributed, 149,000, and that's what we're using up here. 192 hours, and that's what we're using from there. These other three columns, for purposes of determining the labor rate, this is FYI only. We're not using those to determine any of the labor rate calculations. Does that make sense? Let me come back and finish a couple of things. The section B here, this is all of the payroll taxes for everybody, for every employee. Any payroll fees that you pay to the payroll provider, medical benefits, other benefits that might include insurance or things of that nature. So $48,000, and that's where this number comes from. This number, this set, section 6, are those kinds of expenses that are fixed in nature, meaning that they don't necessarily track with sales. They're relatively static. For example, rent. Rent is rent is rent. It doesn't make a bit of difference whether you got $1 million in sales or $2 million in sales. The rent component is the same. So sales related costs, travel and meal related costs, occupancy for your rent, your utilities and janitorial services, administrative costs, business insurance and licenses, miscellaneous income. Notice it's there as a negative number. Miscellaneous costs, amortization, if any, depreciation, if any. Rarely do I see these included in determining the fixed costs because they're non-cash costs. So in most cases, these numbers are always going to be treated as 0. So the sum of these is the 139, and that's where this number comes from. That's the nature of the beast for labor. Now, let me come back to the talk about this and how does this correlate with control. Control has many, many, many different labor parts. Print labor, design labor, install labor, service labor, hand mount labor, on and on and on. There's a lot of them. I have found from working with the 30 or 40 clients that without exception, they have elected to use this average value as the cost for all labor parts. Every labor part has that same average cost. Then, in a cost-based pricing scenario, you can manipulate the billable side through the multiplier. So design has a greater perceived value. So instead of a 2 times multiplier, it might be 2.2. Installation typically has a higher billable rate, perceived value, so it would warrant a higher multiplier. Some of your more basic production-related parts, in my judgment, the 2.1 or the 2.0 or the 1.65, whatever you have in your system is reasonable if you try to alter each of the individual parts with a different cost value. It's considerably harder to do that because you got a part in there that's called print labor. Well, you have to be smart enough. You've got several people that may work in different areas at different times of the day. It's considerably harder to zero in on a unique number for the individual parts, for labor part. That's the reason that I recommend personally that you endorse the average cost of labor concept. And then if you need to tweak the billable side in a cost-based scenario, do that by through the multipliers. In the area-based concept, that's harder to do. That's harder to do because labor is not, with the exception of design, in the prices that are, or the products that you sell that would be area-based. There's not a direct per square foot component for labor. It's indirectly absorbed in the either in the setup time, one time or per piece, per original, or indirectly in the substrate, like the print vinyl or the laminate material or the substrate material. I'm going to stop because I really want to engage questions. This is not an easy concept to grasp. So let me shut up and hopefully we have some good questions.
No questions so far.
This particular, this is one piece of a very small piece, I might add. The other service that I provide that's independent of control, and that is a very, very deep financial a review of your financials. With this is one piece of that out of many, many measurable things. In both the pricing side and the financial side, the intent is to set the groundwork for how you can improve profitability. On the equipment side, it's make sure that you got your correct costs. Make sure that it identifies if you've got costs that you're not capturing. So that's going to overstate your gross margin. And all of it is geared to saying, okay, this is where we are today, gross margin. We want to increase that gross margin by 1% or 2%. And what do we need to do in order to achieve that? In a cost-based scenario, you do it through the multipliers, by tweaking the multipliers by a certain amount. In the financial side, that's a more long-term perspective. Okay, this is where we are. Use this in-depth analysis so that we can set the labor rates or you can use the tool, but also what steps do you need to make for the next year or so in order to improve your overall gross profit of the company. Questions, comments? I always love the feedback, so please share either in the survey or asking questions.
Paul, we do have a question, and it is from Adam. Adam, I will unmute you. Go ahead, Adam.
Thank you, Paul. Appreciate the content. Quick question, sir. So, if I'm looking at this correctly, these numbers are they based on region, or are you just basing them on the actual P&Ls of the company?
This is a live client.
Okay.
So it's their numbers in their market, in their particular location.
Okay. And so that's cool. So with that question, then, would you also then defer saying it should be on a case-by-case basis? Myself, here, being in California, we pay the highest taxes in the land. So that 43 number can and should fluctuate based on my cost of doing business, correct? That's including fuel costs, electricity, internet, all the way down to payroll taxes. Because what I pay in payroll taxes is double than what somebody pays in Texas.
That's the reason that a tool like this is so critical. Right. Because you're absolutely right. Every area of the country, every state has a different combination of factors that influence what that overhead number will be, as well as what your benefits are for the payroll taxes and the medical side that you may or may not provide. Really small shops may have a very low if the medical benefits may be for the owner only, which I've seen many times. But in the larger shops where they do provide that, the benefits might include medical as well as an IRA contribution and things of that nature. So it's very, very personal by company.
Gotcha. So essentially, we could expand upon this if we wanted to, right, and do an even deeper dive by adding other columns for other factors, right? They may decrease our profit margin.
It's a completely different model, Adam.
Okay.
Altogether, it measures about 15 or 20 different, what I call measurable aspects of the profitability of the business. Go to my website and you'll get a picture of a better view. Then anybody that might be interested, just let me know, and we can talk deeper. But this piece is basically extracted out of that overall model, zeroing in only on the labor rate question.
Right. Okay, perfect. Thank you, sir.
We have another question, Paul, and it's from Evie. And Evie, I've unmuted you. Okay, they may not have a mic. Can you
hear me now?
Okay, now we can.
Hi, Evie.
Sorry, I said hi. So what I want to know is, all this is, I understand all of it, is when entering all this into Sirius, when you finally enter our a $43 cost or whatever it is into Sirius, is there a standard or a general multiplier that we can put in or that we enter, or does that also vary by whatever we want that multiplier to be for markup?
Good question. Typically, Evie, the vast majority of the labor parts have a markup that's going to be around 2.0, 2.0.
Okay.
I'm beginning to see some that are falling, that are going below 2.0. In fact, I think the one that we looked at the other day on Tuesday may have been 1.7. Now, that represents the vast majority of the labor parts. When you get into some very specific ones, like design, there's, depending on what data set you have, there is either one or perhaps two design parts. One is called, might be called design creative, and one might be called design layout. Those in all have the same labor basis. You have your same designers, so use the same cost, but the value added perception of that in the eyes of the customer warrants a higher markup. So if you got a 2, the design pieces might be a 2.1 or might be a 2.2. Same thing is true with installation labor. When you go out and do an install, be sensitive to your marketplace. What do you see the typical billable rate for installation? And it too may warrant a higher markup. So there's really just a small handful of the labor parts, in my judgment, that warrant a higher level of markup because of perceived or marketplace attributes. Be careful on those parts that are directly related to production, to what you're producing. Don't be overly aggressive in deviating from that 2.0, 1.7 to 2.0. Don't be too aggressive in deviating from that. That may overall penalize you, from a competitive level.
Mm-hmm. Okay. That's very good information. Thank you very much.
You bet. Anything else? We're a couple minutes past. Any other questions, last comments?
We have another question from Teresa, and I will unmute her. Go ahead, Teresa.
Thank you. So pertaining to the labor rate, we were discussing this the other day. We're pricing out jobs, and certain jobs, certain installations, we need 2 men to be on the job to do it. However, when we're pricing it out in Sirius and we indicate that 2 men are needed for the job, the price of the job comes out way more than what it needs to be. So when you're calculating labor rate for a job that needs multiple people on that particular job for an installation, is it to be calculated differently? Or is it to be that standard labor rate marked up times the amount of people needed on that job?
That's a tough question without me seeing exactly what data set you have and how your installation product may be operating. Conceptually, if you have 2 people that are involved, and I can't imagine justifying decreasing the markup because you have 2 people versus 1. The cost is the cost is the cost. You're sacrificing gross margin if you begin to dilute the billable side because you have to send 2 people. Where it gets difficult is what may be absorbed in that installation or in that service. Is it a vehicle? So those need to be separated. I would suggest that you reach out to the consulting folks at Sirius that
Okay.
help you take a look at how those products are working in your data set, so that you want to be fair to yourself by recording what it takes to do the job, but you don't want to blend the vehicle side perhaps with the equipment or with the people side, so that you're penalizing the customer. Is that I'm not making myself real clear, but just
No,
I would
no, you are. That's yeah. So that's essentially what's happening. So let's say labor rate is 95 an hour, and let's say we have a simple graphics install for some windows, but they're up so incredibly high that you need 2 people to do it. So instead of charging the customer the $95 an hour for the install, it's coming out to be $190 an hour if you're sending 2 guys out there, or vice versa. If you have a vehicle that we're working on, a graphic or a vehicle wrap, and it's a large project and it's going to take 2 full days of 2 men on there, well, again, you're charging 16 hours times your 2 men at $95 an hour for each of those. And then you're charging way more for the wrap than industry standards should be at. So it's been a little tricky for us, and we've had to go back and play with the costs afterward.
Mm-hmm. That's a tough one. I really don't have a magic answer for you, other than to be extremely cautious of not being willing to sacrifice. You know what your costs are. If you have to send
Correct,
2 people
yeah.
because of height, that's a reality. Who should pay for that? Should you absorb that by charging less for that second person? Or should the customer pay because that's what it takes to do the job?
Right.
Being hard-nosed, I would say the customer pays because that's what it takes to do the job. And if it's because
Correct.
of extra height, so be it. But it's a business judgment on things like that, ultimately.
So it's more so judgment by order is what you would suggest. Judge it based off of each individual order. If you think you can get that much for that order, then charge the way you should be charging. But if you don't think that you can get that amount for that particular job, well, then decrease your costs and you have to absorb it for that one.
That's where the business judgment comes in.
Gotcha.
Before, I would encourage you then, as a first step, is to reach out to the consulting team to make sure that installation product is working in an optimum way, in a general sense. Just make sure that there's not that it's functioning as it is intended to function.
Understood. Okay.
Paul, we do
Gotcha.
have an interesting idea, and this is from Adam, and I've unmuted Adam. If you want to go ahead and comment.
Oh, yes. Well, just in response to the young lady's question. So one of the things coming from an audiovisual background before signage, one of the things that used to work for me is I used to scale labor based on senior and junior labor. So typically you always have a senior labor rate. So say a technician who's been with you for years, say he's at $20 an hour. But then everybody underneath him is his junior. Technically could bill out, say, $12 an hour. I've always found over time, especially for larger projects, it really does help scale, right? Because you can say, okay, I only need 1 senior, but I can have multiple juniors at a much lower rate. Because essentially that senior level technician is going to tell those junior techs, hey, I need you to do this, and this for time management. So we can get done in and out faster, we can control our costs better, and then we control our labor rate.
Oh, well, that is a good point. I appreciate
that's
that.
That's an interesting concept, Adam. And that's where, I made the comment about embracing the notion of average labor rate. I think when you get into the products that are service related, your notion makes a great deal of sense. For the production related stuff, I think that would be an overkill. But I think in the design, in the service, in the installation, your concept has a great deal of sense. And that could be manipulated by the, how the part is set up to function to allow different, for person two to set it up so that it would support the senior versus the junior level part consumption. Does that make sense?
Mm-hmm.
That would involve
Yes.
the consulting staff to help do something like that. Conceptually, I like the concept.
Yeah, that is a really good idea. I appreciate that. Thank you, Adam.
You're welcome.
We have gone past our time. I really hope that this session and the one Tuesday have been helpful to everybody. And again, I would appreciate your feedback in the survey if you care to share that. I say that because it helps Linda and I guide how we try to focus on A, topics, and B, how to present those topics. So share your comments. Take care, everybody. Have a great rest of the week.
Thank you, too.
Bye.
Thank you, Paul. Thank
Yep.
you.